Welcome to Inside Traders. What's up, everyone? I have an exciting episode for you today where I'm going to be spilling my guts about my long and sordid past with Robinhood and some of what I've learned using the app. And maybe you could consider it some feedback for the company and why the idea came to my head to maybe try opening my own service that people could use and leverage some of my technology, like this guy. Trade flow should give us the last 5 minutes of trading. Nice. You can see it, I think. And so like this is literally the real-time trade flow of the last 5 minutes of trading. Lots of, what is it? We got bulls. So the overall sentiment for the last 5 minutes is bearish. Now, it should be bearish. It's been bearish for a while. This leads really well into like one of my complaints with Robinhood, which is, so like, here's what they say their mission is: to democratize finance. Well, like, finance is really complicated and it has these tools which can really cause a lot of trouble if you don't understand them. And so you're like kind of want to democratize fire, which is great tech, and we all appreciate being able to cook food, but it can also burn people's houses down. So like there has to be some consideration for that. And kind of like why I've made this salacious headline and thumbnail regarding Robinhood is because I just don't think they do a good job of actually living up to their marketing, their own brand, and like what is possible today. And so like this is my kind of constructive criticism. Hey, they say a good friend knows how to criticize you. And so here it is. There's a mismatch between their like marketing and there's a lot of other stuff I kind of want to talk about, but that is why we're here, right? Is to hear these thoughts. So there's a great mismatch between what they say they are and what they actually are. And I can illustrate that with a lot of examples. And so what they say they are is a safe platform for new investors. And if you listen to their history, they're always talking about safety first. We're a safety first company. And it's because like some really crazy shit can happen when you're using these really powerful tools like margin and options. And those are like kind of the best tools to use. Let me throw options on the screen and we could see what people are buying into close there as well. So let's restart this. Well, first, let's see what it actually says. Yeah, all the premiums going into Tesla, like always. Pretty good amount of bear flow. KRE is getting called up a little bit. I mean, this is just like what's happening live, the actual day. Obviously, I have right here. I can't show you easy, but it was, geez, a lot of put premium, 13 billion. I'd have to check that number. That doesn't seem right. 13 billion? I'd have to check. It says that the entire market session today was 15 billion of premium, 1.87 put to calls. And yeah, so I'm not sure. We'll see. I'll have to double check those numbers and make sure they're accurate. But I am getting like a lot of velocity alerts. And so I've been building these tools because like Robinhood doesn't give them to you. Anyway, what was I saying? So like they're marketing themselves as this safe platform for new investors, but like margin and options are the most dangerous and amazing financial tools that there are. And like they don't even add the simplest of guardrails. For example, every option trader in the universe like that has anything, that knows anything about anything, is used to creating their orders with stop orders. And like that is just like common knowledge in options land. You always have a stop to limit your losses because the contracts are going to gap basically every day by 30%. Always, every day, no matter what. So just like consider that, which is why they're so powerful. And so like, and that's why so many people are trading them. What is it? Market close. Let's see what people were buying to the end. up on the screen. So what are they buying? Tesla, Bull, pretty much. Nice. That's what I like to see. Now, this is like a white list of companies that I'm paying attention to. Like, this isn't actually, I should have that filter off. We could probably still get some trade flow with the filter off, actually. Let's see. Like, we should have QQQ and SPY. Oops, wrong one. This one. So this is now what people are actually buying and selling. And with that, huzzah, worked. So yeah, like this is the contracts. We have 29 million of premium going into this IWM put. Like, puts are pretty powerful. And that's another thing that's like crazy about Robinhood. Okay, so like the salacious headline, it's real. It's totally real. And somebody's got to do it. And so maybe I'll try to build it and then I could sell it to you guys. If it works, it'd be awesome. And so like there's a lot of things. Like, there is zero ability to understand your risk in the app. And at every possible turn, they're like funneling you. Like, I've worked at these tech companies. I know how they think. Like, you have a top of funnel and you have like this waterfall and you're trying to funnel people into the flows that you want them to go into. And as far as I can tell, theirs is to maximize assets under custody or management, and very much less maximize, not less the return of their customers, but like the best metric you could possibly have is a portfolio that is exiting more cash than it put in, because that means your product worked. And as far as I can tell, they're building more of like a money trap, where like the money comes in, it never gets out. Not really, if you know what you're doing. But if you're like a new investor, which is like what they're marketing themselves as a platform for, in fact, they specifically say that they don't cater to professional investors, and yet they offer nothing in terms of managing risk, not least an assessment of your positions, and like the most simple of things that could be done to like create these hedges, which could all be done automatically, by the way, and probably for profit as an insurance product. But like none of this exists. Even to understand your returns on a given contract, like you can't just like sort by puts and calls. You can't see your returns quickly really anywhere in any organized way. You can kind of see them on the main page or whatever. Like, what you really can't see is your risk. It would be so easy to build a slider that, you know, if you're a big tech company, that is, that would like let you model the option price as the underlying changes. In fact, it's like kind of being done all the time. That's how you derive implied volatility, is you basically just start regression testing or something, where I don't know what it's called, but like you just throw out a number and you're like, okay, the historical volatility is 50%. So I'm going to start at 50 and see if that model matches the actual price compared to what my model's creating. And then whatever the gap is, you just like divide it by half and then continue. I don't know. There's probably like more advanced ways, but that's one way that you could do it. And so like then whatever that value ends up as is the actual implied volatility for the contract for that 1 second. And then you have to recalculate it again. And so it's kind of like pointless. Like, okay, well, I'll just look it up then. But that's a aside, because I have to calculate my own delta to deal with these guys at Robinhood, because they're not building the tools that they should be building, in my estimation. Otherwise, you can't call yourselves Robinhood, and you're like co-opting a brand that doesn't belong to you. And so if you're going to say that you're Robinhood, then you shouldn't be like building money pits for degenerates so much as And they're not like, first of all, they have this great product offering in terms of retirement accounts. They'll match what you put in. That's incredible. That's incredible. Like, so, and there's a ton of potential still. But like, I'm telling you from my experience with the app, I would just be so curious. I've actually applied to work there, so probably not going to happen outright. But like, I think that's because the company has such an interesting opportunity in terms of like, for real, the fire of options and of like all the tech that hedge funds leverage to be able to create outsized returns could be rebuilt and distributed in a pretty safe way and be as reliable as theirs. And so that's one of the things that I'm kind of experimenting with. And if I get it working, I definitely will try to sell it and just make it really easy for you to like turn on a program that hedges for you. Because when you're using margin and options, which is, I would argue it's just not worth your time otherwise. Like you have to be, it's either set it and forget it. And like, that's really what you should do unless you're me or whatever, like unless you get into it and then you're like, okay, now we're in margin and options land forever. And we need to build, I'm speaking as a we, but like we as a community of traders need to build these tools that help us understand our risk as a baseline, but also like model in real time changes. So as the interest rate increases or decreases, as the price of the underlying changes, as overall volatility rises. And so there's these ways that you can model and really understand and quantify your risk. Robinhood doesn't give you any of that shit. They funnel you down pathways to deposit more money. They never, like, here's another thing you should never do. Anyone who's experienced markets knows that you never want to realize a loss. Like there's a big difference between like having a loss on a number and then realizing the loss. One, you spring back, the other, you get nuked at the bottom. And like, as far as I can tell, they help their customers realize losses. I've been liquidated multiple times by Robinhood, and not once, especially when it was like kind of obvious, was there even the slightest attempt made to not liquidate and to even liquidate more like positive positions. They essentially, I wonder, here's the ultimate question of this video that has been on my mind for a couple of months now. Because if it is, they're fudged. YouTube algorithm, gotcha. I got the algo this time. No, they're fucked. If it turns out that they profit from customer losses, that's not going to be good. And so, like, I doubt it's the case, but it's not really something you would be able to hide. But anyway, even if that's not the case, then still, like, there's so much. Like, they're offering the Prometheus fire of the tools of these finance gods that like BlackRock uses to gobble up all the homes in America. And they're like, they have access. They know that those things exist. And like they have a roadmap and they're building good things or whatever. But like the thing that's in my mind egregious is basically ignoring the fact that you're funneling people down a flow that is going to lead them to take on like pretty crazy risks that, if you're being real, doesn't really match what your marketing is. And so you're going to put up a couple interstitials, a few dismissibles, and maybe like a thing that people have to read and say yes, and the whole thing could be done in under 10 seconds with muscle memory, right? So like, is that a barrier? I don't know. Like it's, you could call, like, to me, that is like a couple of layers of nylon protecting you from a pandemic or whatever. Like, that's not enough. I mean, maybe, but not really. And so, yeah, like, there's so much that they could do to help their customers not realize losses and to help them understand their risk. And they do none of that. They don't even do the basics. You should like have to opt out of putting in a stop order. Like, if you're really a platform for new investors and you're all like experts on margin option, like, whatever, like, if that's the case, then why can a noob place a naked call easier than a call with a stop? Egregious. And so there's like 20 of those that I'm going to get to eventually in talking about how we have these great platforms and tools to be able to participate in markets, but there's always somebody like on the other side of your trade. And it's something definitely to think about, is who is profiting from my loss. And you would hope that the company that is like called Robinhood, that is like supposed to be democratizing finance, would be doing everything in their power to help maximize customer success, which would be the metric of that would be literally realized gains. Like, that is, but I don't think they actually do want that. I think that the incentives are completely aligned the opposite. And who knows? I don't know. I can't prove that. I'm just speaking from what I've sensed from the culture over the years. And so, yeah, like, it's impossible to know whether they profit from customer losses. It's probably not impossible to know. I just don't know. And so, like, yeah, that's my feedback or criticism, is there's like a laundry list, if that's a phrase. Why even is it? There's like a good long list of things that, if done, would dramatically, I guarantee, improve the number of profitable transactions that your customers experience on the platform. And so, seriously, like, this is something that I'm interested to build for myself, because the cool thing about markets these days is there are so many indicators and signals and methodologies that already exist. And what is all of it trying to do? Predict the price. And none of it works. None of it can. But like, it can get pretty far. I mean, we got a lot of stats nerds dorking out on how do I make the math match the model or whatever, you know, how do I make this equation sum to zero or balance out or whatever, and do that in a loop and do it repeatedly across time. And through that, we derive like these indices, which we can compare. And that helps us make decisions that are actually somewhat predictive, the accumulation of which actually possibly does provide a hedge, an edge that I think hedge funds avail themselves of. And I would be curious to try to see what ones I could build. And so I've been trying to build this program called Delta Hedge. It works, I think. It works in 2 levels right now. I mean, works as in, if I configure everything right and I'm like watching it, it can do what I intend. And so it has a long way to go. But imagine that if you had a system like this that was running distributed across multiple, you know, like Europe, North America, Asia. Boom. And all of them are running a dead man switch that, if not activated once per minute during market hours, immediately sells to cash anything that has profits, and then puts that in a T-bill or something. I don't know. But like, for real, like, all these automated actions, because that's the only way to be competitive in markets. And everyone else is just a retailer. It's a hard word. And so, like, for real, they're just retailers, these freaking retailers. They get they're always holding the bag for the pump and dumpers of the big banks and institutions, and it's a really hard game to win. But I do know now the way to win. I've never won, and so that'll be fun if I do one day. But so far I haven't, and it's been a while. But still, I'm trying because it's so fun to play. And so, like, here's the trick that the smart money does. They have really good buying power at the bottom. And what I just mean by that is they have something to sell. Okay? So like they have shit to sell at the top and the bottom. And so what if you had a platform, should be Robinhood, but now it'll be fucking Delta Hedge. It'll be Delta Hedge. And on Delta Hedge, you can subscribe for $500 a month, but maybe like $50 a month for the early adopters, maybe even a lifetime on that one, would be not only like access to all of like the trade by trade order flow and all this stuff, but the actual technology to let you use the same tools that is truly part of Robinhood's like mission, which is to democratize finance. And so like they are giving, I don't know, like powerful tools out that could be considered weapons. One could compare it to passing out guns at a playground, but like in fact, I might compare it to that in terms of like the power of these tools and the limits of the protections and things that they provide. There's just so much more that they could do. And so, yeah, like it's, I don't know, like there's a lot more feedback that I could give, but the general idea is we need a platform that is actually aligned with the incentives of the customers and of the clients. And so that might be something I pick up myself. And I think it's because using modern APIs, a lot of this is more possible, and also GDT. But yeah, like the ultimate trading tool would be one where you have all of your positions like in front of you and in their aggregates over their intervals. And at any like view, you could instantly see and attribute everything. So you could say like, oh, the price is going up or down or left or right, this or that. By any dimension, you can slice and dice the data to create these views and surfaces that help you quantify your exact positions of everything that helps you, be informed in terms of trading. But for real, like every unit of information that can help facilitate a trade would be like so easy to be made available, and I'm working on already. But the number one thing is your risk, and your risk is really easy to quantify. It's not easy if you're new to investing, then it's like basically impossible. But if you are spending a ton of time thinking about this stuff, you can quantify the entire risk of a portfolio in a fraction of a second and continuously in real time. So I can tell you like the risk of anyone's portfolio, just give me their positions, give me their symbols and their tickers, and I'll give you their exact risk streamed second by second, which is going to be their long and short call and put delta, like in all the Greeks or whatever, and whatever you can derive from other sources like volume and volatility at whatever period makes sense for what they'd be most interested in. And that's a fun thing with data, is there really is no one answer. You just slice and dice it by whatever way helps you be informed enough to make the right decision. And so like for me, one of the things that I want to capture from the order flow is velocity times volume and something. I think that there's got to be a way to create these really strong like signals, because when I see things happen, like it means that the market is moving in a specific direction. And even just knowing that it's moving, there's an arbitrage of volatility. So, yeah, like I think all these signals are possible both to derive, like we were talking about with the stats nerds, where they loop over and do their test. And if it, anyway, however stats works, and that they create these indexes, they derive these indexes that are comparable. And so you can sum up all this data in an index. And like that is a pretty good representation, pretty accurate representation. And so, yeah, like since this monitor started, these are actually the most traded contracts that there are. So we have IWM puts and just puts. Wow, all the money into puts. I mean, so like you see that and you'd want to be able to buy a put. Now, if you get leverage locked on Robinhood, which I have been many times and am like kind of right now, is like it's a tricky position to be in. But like there's so much padding that they could just like provide for free, not least this program that I'm like writing myself, which is like crazy that it doesn't exist off the shelf, because the idea is so sound. Like it's called Delta Hedge, and the idea is that the options market is both more reactive and provides an opportunity because of like how the probabilities are derived to do some really advanced and sophisticated hedging without like a lot of work, or it's not very complicated. And so like basically your delta, it's like the dollar amount that the price will change as according to the $1 move in the underlying, whatever is the chance you're going to win. So just take it as a percentage. That's the chance that you're probably right. And so essentially, like often and always, like if you're deep in the money, like if you're buying a delta, if you're buying a contract whose strike price is half of the underlying's current price. So it's Tesla 250, you're buying at 125. The delta is like is essentially one. It's essentially 100%. And then it's 100% for like the next 20 contracts up in strike price. So the 127.5, the 130, the 132.5, 135, all the way up to 250. Like you're probably going to get the first 20 or whatever. I don't know, I'm making that up. But like, like you're going to get a ton of contracts that all have a delta of 1. So suppose somehow through whatever means you get your hands on one of these delta 99 contracts. It's like durable, meaning it like is deep in the money and expires in a couple of weeks. And so it still has like pretty good extrinsic value actually. But most of the value is intrinsic, as represented by the deep delta of 99. My hedge program does nothing. It does nothing. And it is essentially the same as owning shares. And so you could exit those shares on the same day that it expires for the same profit or whatever. In that way. And like you're only exposed, it's so efficient. It's so freaking efficient because you're only exposed to the upside, none of the downside. Now, what happens if your delta of 99 does become 98? Well, the program will begin to hedge. And so it will remove the equity in that contract. And so I'm not saying it's like a perfect system because it doesn't really capture gains, but it could. So like one thing, you could set a rule, right? And you could just have an easy interface. If you're buying my service for $500 a month, plus 10% of the hedge, whenever you sell for profit, the hedge, 10% every time, plus costs are fixed. But that's the pricing of Delta Hedge. And that's fair. That's totally fair. If you're selling a hedge for a loss, I take nothing. If you sell a hedge for a profit, I take 10% and as a percent. And so, yeah. But you could set all these rules on your Delta Hedge, and of course, gamma and theta hedging as well. But like just hedging your positions. And also, this is working for shares as well as options. It's hedging for people who use margin. It's giving you peace of mind with margin. That's why we have to have the dead man switch and the 3 redundant locations to feel like some marginal safety for real. And so all this can be built, for real. It's like not even that crazy. So yeah, like you get a Delta Hedge program and it is doing one thing and one thing only. I'm already doing it. Let's see if I could show you. Code? No. Well, I could probably show. Trader. Trade flow. So what am I going to show you? Oh, the Delta Hedge, the Greeks. And so, yeah, like I am already, let's get rid of this guy. Yeah. So anyway, let's move beyond Robinhood. Anyone who was interested in the Robinhood part, that's the video. Like I'm closing it off on that. I have a lot more shit to say about how like their culture or their marketing doesn't match the app at all. And how it basically is a giant money pit where they're constantly trying to get you to deposit more funds. Like the default action in a user interface, which I know they know this stuff because their app is so freaking good to use. So they know about how nice UIs are and how it's fun. And so they've definitely thought about all this, which is like even more egregious. Like you put so much intent into the interface and every flow is deposit more and none of the flows are quantify risk. There is no way on the platform to understand your risk. So you're giving out the most dangerous tools available to your target audience, which you claim is new investors, and not even providing the basics in terms of understanding their risk and operating as any professional would who understood how these marketplaces are different, how the options market is different than the equities market. And so, and needs to be approached in different ways. So that's the feedback. I'm sure I'll have more to say, but like for real, every flow is deposit more. They get you to get locked down at the bottom. They force you to realize losses. And all of that is the opposite of what they should do. They should just do the opposite because it would be free and easy and like much creative, not creative, much like it would compound benefits to everyone. And so I don't know, like I don't know all the incentives. I don't know the order flow incentives. I don't know any of that shit. And so one thing we could do though is we could watch Mr. Tenev's CNBC for a bit, see what he has to say.
Growth, and we were known in the press and media for individual trading. But if you look at the products and the opportunity, I think Robinhood's just very much in the beginning. There's a gigantic financial services industry that's waiting to be disrupted beyond just investing and trading. You're
Yeah,
seeing that with
like
to products like retirement,
being a
where
hedge
they're
fund,
offering a 1%
Delta
match, 3%
Hedge.
match on contributions if you're on a gold, if you're a gold customer, along with 4.9% APY on uninvested cash. So these products both have allowed us to adapt to the new environment and give customers incredible value in a high rate environment, while also moving Robinhood along on our long-term journey of actually being the best place to hold all of your assets and all of your cash.
Is that gonna drive
Yeah, like if you're going to do that, then you should
40?
be focused on helping your customers be successful, which would like entail as a baseline some information about like understanding your risk, but also like small like changes in the UI, that it should not be harder to limit your downside than easier. Like you should have to work not to place a stop order. That should be 2 clicks instead of 1 click or tap or whatever. And so obviously the thing that's egregious is how good their app is, and that they must have thought of all this.
How are you thinking about recapturing some of that growth? And is financial services enough of an opportunity in terms of margins and just getting back to really the heyday of Robinhood we think about when we went public?
Yeah, I mean, obviously interest rates have had an effect on the overall valuation picture, not just for Robinhood, but for fintech and growth stocks in general. And what's exciting for me is that we're very much at the beginning of the journey here. I mean, Robinhood is still only in the US, and we have ambitious plans to be all over the world and expand internationally as a software company, not as a brick and mortar institution. We want to build these deep relationships with customers and have them trust us with their retirement savings. And our retirement product just crossed $1 billion in assets. Of course, that's pretty incredible growth in just a few months.
Yeah, I think that's how they measure success in part is.
So I'm excited to show that to you guys when it's live, but I think
assets under management.
And Vlad, it's Dom here. One of the things that you look at in terms of Robinhood's vision, I guess, that you have for it, is to become more all-encompassing with regard to financial services for all of the clients that you have out there. Is there going to be perhaps a focus on trying not to lose focus if you're going to branch out into all these different types of platforms and different types of offerings? I still think of Robinhood in some ways, in terms of crypto, we've seen that fall off.
Robinhood product, I think our unique differentiators in the market are our use of technology, which allows us to dramatically lower the cost that we offer to customers for our services. And
dude, the cost is not low. Well, actually, it's very low.
The best positioned company
among retail investors,
compared
that's the
to
area
what
that you're moving into.
was.
What impact do you expect that to have, and when will you have the risk
But
taking on the retail trading
it
side?
could
I wonder
be
how you're
the
positioning
opposite of how
low
it
cost
is.
and zero fee per contract options trades. That's very unique in the market. But if you look at kind of the value of low cost and zero fee per contract options trades,
it's definitely not 0 fee per contract option trades. It is. I've been charged fees. So like, what am I being targeted?
that's very
If
unique
so,
in the market.
that's
and
awesome.
so you have all these people that are extremely sophisticated and are employing these hedging strategies for whom paying 65 cents a contract at a brick and mortar brokerage house competitor is unpalatable. If it's 65 cents a contract and you're trading even 100 contracts, that's a significant amount of money. That's $65 for that trade. So being able to save that, I think, has led to
This is
Robinhood in
awesome.
a relatively short amount of time being one of the largest options brokers and options trading platforms out there.
Okay, so like you say that, so you know that options trading is like an explosive part of your platform. You know that most option contracts finish out of the money, whatever. Like there is no easy ways that you're providing to customers to like lock in gains or limit losses when like that is what the hedge funds are doing. And so like there's a ton of tools that they must have. If I have this, if I have my Delta, where is it? If I can get my own freaking Delta and it's pretty accurate, like we can test it. I think I was testing it in registry, maybe. No. Registry.get delta.get option. What am I trying to do? Delta. No, I just want to say Greeks.get Delta by ticker. So let's find ourselves a ticker. Where would I find ticker? Tick. Find. One of these guys. SPX. Now give me a QQQ. All right, I'll take it. Is there nothing else? There must be something else. Oh, here's a Lucid one. Okay, we'll grab Lucid. Boom. Is that expired? No. So, yeah, like this is using a model you can see my screen. Let's move that there. So this actually does have to do a remote lookup on the first contract to get the IV. That's because it's so hard to calculate IV. But if you do have IV calculated, then as long as it doesn't go stale, you can do a ton of remote calculations. And so, like, even if it's just every 15 minutes, you could be updating the delta, you know, like several times a second, and it would be accurate. I mean, it is accurate. And so let's say console log, boom, go. Code is running, stop code. What, return? I don't know. Break, exit? How do you exit? Is that it? Let's see. So it says, here's the Greeks. Data not found, look up for the stock price. I mean, this is streaming several times a second normally. And so I have a really low cache on that. Normally, I wouldn't need to do that lookup. And during market hours, I wouldn't need to. Anyway, that's the delta of this contract, 64, pretty high delta. And so this can get, like, let's say, you know, like you have this hedge program running and it's abstracted your shares as options and all of your options, and it's only hedging the downside of the delta on whatever index you want. So that's what would be cool, is if you had a little interface where you could configure rules. One of them might be like reset the index, the hedge from index every time the price doubles, which is gonna happen with an options contract. Like they double a lot, you know, especially the ones that are expiring soon because the gamma's like crazy. So yeah, I don't know. I mean, I haven't been able to build it. Otherwise I'd be like a gazillionaire, but it's not like there's any tool for infinite money or like that can just like print cash without risk. But there's a lot that we could do to model and manage our risk. And the most basics of those are like, you just need a slider. I still don't have it, so it's not like it's that easy to make. But like you just need a slider that tells you how your position values can change as their underlying moves and different conditions. Because, and that's why you can't just delta hedge. You have to theta hedge, you have to gamma hedge. I think to the upside. I don't know. Like hedging goes both ways, right? And so, yeah, this is some of, like, I'm just using some Black Skull's model to calculate this stuff, but it is pretty interesting. I mean, GDT wrote a bunch of this code for me. So like this stuff, I have all these different variants. I can't tell you if the math is right. I can tell you that trade velocity just spiked to 600 trades a second. And so not that crazy, but for after hours. So yeah, it's not like any of this stuff is like making it easy for me to like print cash or anything. But I think that in terms of building tooling and infrastructure that helps people take advantage of the same services as like the finance guys, the same tools, the same instruments, like they should not have all of the exposure to the upside. And so, yeah, like more people should be trading options, but they should do it in a safe way. Robinhood, like freaking make it easy and safe and fun, but it's fine. I'll make Delta Hedge for myself and then see if I can sell it. If it works, I guarantee it'll be worth buying. And it seems like it has to work, right? Because again, the concept is so sound of hedging by delta. That doesn't mean that like it's going to limit losses or it's going to limit upside. Like when you have to sell against your equity, I mean, that's not good. That's not good. But what it does is it automatically protects against like all sorts of catastrophic things that can happen with options because the contracts are so volatile. And you really, to compete with like the market as it is today, you can't be like looking at your contracts and calculating things manually. You have to have an automated system because you need to be able to react in real time. And real time is like the best you can do. Like with all of your signals, with everything, you're still probably going to be at a couple of milliseconds. Things can change. Like the price can double for sure in 1,000 milliseconds. Yeah, the price can double. And so you have to have a system that is doing a ton of work in the most efficient way possible, which is why we have to like calculate our own like volatility and deltas and stuff, because it's too much work to pull it. Like we need to be able to get the index in a fraction of a millisecond. And so, yeah, like, and then add continuous caching layers. And so like, I know that my delta isn't like perfectly accurate in that way. And it probably actually is going to fire off in one way or the other in terms of the update cycle of the remote volatility. But like, it's hard to calculate implied volatility and I can't do it yet. And so the point is it is possible to model all of these different things and through that to create a rules-based system that makes it so that you can take advantage of the same upside as these big institutions while having a good measure of protection still. And then you just tweak it. How reactive do you want it to be? When do you want it to, like, what's the index? Is it a daily index? Is it something you set manually? Is it a threshold you draw? Like, you can make it so easy for people to be able to hedge. And so I'm going to try to make it easy for myself and then sell it. And I'm kind of getting excited about what's possible there. And I'm definitely going to take a percentage. If you harvest a Delta Hedge and that made you money, yeah, it has to be percentage based to keep funding all of the new tools that can be built. And so I don't know, like first I got to see if I can make it work for myself though. Seems like it should be possible. And so, yeah, just like getting the Delta is a big improvement in the system in terms of Delta hedging. Can't remember why I was telling you that. Just other than it'll be great to be able to take advantage of some of these tools once they're built. But like, these are all new ideas to me anyway. I didn't know that most of the market activity was happening in options, and that most of those options were happening in expired contracts, which are the most volatile on the market. And I would like to be able to build and to participate. Like if you go back to the early episodes of this show, I was like having fun in there and playing around all the time. But I got nuked like a few times that showed me like there is no way to manage the risk manually. It cannot be done. It's not even possible. And so that's when I set out to build this automated system. And the system is up and running pretty well. Like I said, it has two modes. So one is like portfolio hedge, and it just watches every position and has a socket connection to the underlying, which is like firing off several times a second. Basically, I could go trade by trade if I needed or wanted to. In fact, I think I do actually go trade by trade. Trade your market. Let's see, market stream. So I'm got this array of symbols, and what am I filtering on? Quote. So I'm not going trade by trade. But I did go trade by trade at one point. Interesting. So yeah, like the Delta Hedge program is already being fed from this socket connection a ton of data. So it's updating boom, 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 boom. That's how fast the Delta is updating. And for every contract, for every single contract, because that's how fast the underline's changing, which is great. And I'm using Redis, which is like new to me, but it's like pretty freaking good in terms of what registry? What is this? Speed. In terms of speed, it's like actually got pretty good speed. Okay, actually I do remember what this is. I delete this stuff here. So anyway, yeah, like that's some of the stuff that I think should be possible to build and that I wish Robinhood had made, but now I'm going to make it for me. And it is basically get a socket connection to the underlying price. Anytime it changes, update the delta. If the delta is below the threshold of a previously set index, which could be the prior day's close, a manual line you draw in price, or whatever, just like when you start the hedge, whatever. Like if it ever goes below that threshold you set, and that could be like a percentage or something. I think it has to be just a percent. But I kind of like my way of doing it, which is as a percentage of the hedge contract. See, this stuff isn't easy, but like you could abstract all this into like a Delta hedge and, you know, like make it easy. And so like what the customer actually sees is just like, you know, like another position, and it's just like, it's special because it's, you know, a synthetic position, but they can buy more and sell it just like any other in terms of units. And I take 10% of the sell side on profits only. I'll take it up to I'll take every penny of that 10% plus costs. And those are fixed. I mean, aren't fixed, but like they're fixed. That's in addition to 10%, not less. And so that's motivating for me to build it. Like if I get that, I'll build it. That'd be great. And I think people, you know, I'm just thinking out loud, that I think it would actually be really useful because then you can use margin. And that is like, why would you be in markets unless you're going to use margin? Doesn't make any sense. It's just not worth the time otherwise. So anyway, yeah, like that. I guess that's today's episode. Is I do have some like updates and stuff on like this Delta hedging program I've been talking about, and the update is it's working. It hedges, and like it has so far to go before it's both accurate and reliable and effective in all of its duties. But still, the core fundamental idea is working. And so that's something to be excited about. And if I do actually get it working, then I think I will make it so something that people could buy. And otherwise, I would suggest not getting involved with margin and options because it is too complicated and it does take too much time. But like, if there was a way to make all that complication really easy and abstract it away, where you just like, we're like, oh, buy more hedge, but you know, like you don't know what it's even doing. All you know is it's going to do more of what the price is changing. So like, if you like how the price changed when the other prices changed, and you want more of that to happen, then you hit the number more and then swipe up. And all this is super possible to be built today, especially on like these platforms. Like Tradier seems pretty freaking cool. Pretty excited to see what's possible there, but I think everything is possible there. And yeah, like imagine if I've like to do this GDT, where is he? GDT. Let's go talk to him. Is that not him? What is it? No. I have to manually reset, I guess. Okay. GDT. Select. Oh, wait, no, that is right. Okay. I just can't see it because of this. So we are on. Nice. What were we going to ask? Hey, GDT, how should we build an app using the Tradier API so people can pay me? I mean, leverage all the new tech I've been working on. Like Delta Hedge and the attributors and the speculatories, all of which will have normal names, but those are my names. Let's see what he says. Okay, so Tradier OAuth, which is like half the battle. Front end React, no. Is there one way for the front end, is there one ring to rule them all? One language that will deploy on every surface imaginable. Yeah, there he's like making the app. It's a leading question, but I'll ask it. Not entirely sure of its purpose. The attributors. That's what lets you see what's happening. So like if there's a big overall price change up or down, you want to know the exact position in real time. And you want to be able to see that in different intervals. Time segments. Yes, Flutter. Yes. Okay, let's use Flutter and Firebase to build this program and include a Windows/Mac app. We want one line to build for iOS, Android, Mac, Windows, iPad. I don't know. That's like iOS. What else? You know, web and web. What does he say? Flutter with Firebase is cohesive. Google owns them both. Google's like pretty good at tech. That's one thing they got. They got engineering. So enable web, enable Windows desktop, enable Mac OS desktop. Develop your application, build and deploy. Integrate Delta Hedge, attributors, and speculatories into the app. Totally. Build and deploy. What are the tools and best practices we can leverage these days for continuous testing and deployment? I kind of had this idea about test-driven development the other day, that maybe it's not going to go out of fashion or whatever. Maybe that'll be primarily how people develop more in the future, is because then all the AIs can just read the tests and make sure that they pass the test. Like that's a pretty good way, because that's all you care about, right? And then what actually becomes like a lot of engineering is like, how good are you at writing tests? It'd be like, here's all of the cases we need to cover. And I mean, a lot of this is a lot of why I love working with TypeScript. I would never have attempted anything I'm attempting now if I hadn't found TypeScript a couple of years ago. I mean, it's very popular. but still, like if I hadn't like adopted that system, and kind of like the superpower of TypeScript, and I used to talk about this all the time when I was learning it, is it's like writing a book to write the book. So like you're creating a framework to help you code, but it's like not only code generally, yes, but like that specific project, that specific function, that specific variable. And so you can infinitely type your program, which means anything that has a really complicated interface, you can make as simple as you can imagine by just continuously scoping down the types. And so it makes me wonder, like TypeScript is a new tool. When I was first coding, I had to make a rounded button with 4 fucking images, 5 actually, right? Because the top left, bottom right corners were all 4 separate exported images that I had to take the marquee selection tool and grab the part I like, that block, and save it as its own file. And each file had to be separate and individual. And then there had to be like a vertical spread and a horizontal spread, 6 images. And then I could build a table in a way, I can't even remember. Eventually, I think I still did this somehow with divs and stuff in HTML. But like I would get it working in a way where whatever I put into that table, it could just grow infinitely. So like I could have any text in there. It could be like a whole sentence long, and the button would just look perfect. You know, it took me like, I don't know, 20 minutes to build that button. And now it's 1 line of CSS. And that's the fun part about being like probably young enough to still code. I don't know. Like, will I want to code it when I'm 80? I hope so. I do hope so. I don't know if I will. I can't see why I wouldn't, unless... because to me, it's going to always just get easier and easier. And so, because that's how it's always been throughout my entire life. Like everything was so much harder, you know, like front end, not front end. What was that? Front page was like this, like Dreamweaver, like these programs to build these websites were so complicated. And now VS Code is like a dream, and like coding with AI is a pleasure. It's like somebody who's a well-trained artist being there to hold your hand while you paint. So, well, this is nice, yeah. So, oh, it does look good, thank you. You know, it's like you're not actually doing it, but they are holding your hand. And so, what you can make is just so much beyond yourself these days. It's really incredible. And I'm glad to be able to take advantage of it as best I can. And so using AI, and that's another like thing that I try to, you know, live stream on when I've got the time and energy is I'm not complaining, like the just what's possible with AI. Like, look at all this. It's too much. That's a lot of great. Don't tell him it's too much. We want him to keep giving it, but it is too much. That's a lot of great info for us GDT, but please say it in less than 10 bullet points of 100 words max. See how he sums it. Yeah, we know about version control. We know about GitHub Actions. I don't know about that. Docker, yeah, Docker. I think Docker is a new thing that's important. Deployment, feature management, yeah. Oh, that's really fun. Database, like Liquidbase. I don't know about that. But yeah, I'm probably not actually going to make this into something that's generally accessible for a good long time, if ever. But if it does work on my end, then I'll probably want to take advantage of it, of selling it. So we'll see. I don't have much to like show you other than that's the idea of it anyway. And it is it's something that I haven't been able to fully build or realize. And so right now it's still just coming together. And the thing that I keep coming back to is I've been hitting these roadblocks is like, why can't it be done? That's what I want to know. Why can't it be done? I didn't know about it until recently. That's why it couldn't have been done before. At least like it's not like I was like trying to find out or whatever, but like I didn't conveniently know about it. Now the idea of hedging by Delta 99 seems awesome. It seems awesome. We're like, I guess you can't double when the Delta index if it caps at 1, but you can also index your price. And you can Delta hedge by RSI and the Bollinger Bands and all this kind of fun stuff. But a lot of this that I'm building is stuff that I wish other people had built and I could leverage. So if I want it, hopefully others want it too. And with that, I'll end the show and just say, freaking protect your clients and build tools to help them understand their risk. And like, I'm talking to Robinhood. This is how they get you. They will get you to create losses at the bottom. And it's exact opposite of what they should do. It's the exact opposite. It's crazy. It's crazy. And so what I want to know is like, why do they do the exact opposite of what they should do? In terms of like how they market themselves and what they claim their mission is. I'm sure there's reasons, and they probably have a 4-letter acronym called FINRA is one of the reasons. But yeah, like it's such a fun app, and they're kind of getting close to what I see in the markets, but not really. And so apparently, but like, now I can try my best to go and build these things and see if I can make them actually functional. But it's, again, like I said, I haven't been able to do it. I can't figure out why it is impossible. I know why I haven't been able to do it yet. I can't figure out why it's impossible. And so as long as I can't figure out why it's impossible, I'm going to keep plodding forward as best as I can, because if it does work like I think it should be able to, it's not going to be some miracle. It's not going to be some like infinite thing. It's just going to be a way to limit your downside and to be able to take on a little bit more risk and manage it automatically. Now, the reason that's cool is because if you do take an active approach, then you can get paid to manage risk. But if you mismanage it, they'll slice you in half. Not on my platform, though. That's why you should subscribe to this channel and stay updated and see if I actually do any of this stuff, because right now it hasn't happened. But hopefully in the next few weeks, I'll have something that is reliable enough to test and like across many platforms. And then I can finally go and do and participate in this world, which is the 0-day options. And all of that is like leading to the ultimate purpose of all of this, which is I think I can abstract that data into something. I think I can abstract 0-day options into a product that is like ridiculously fun, which everyone would love to play with, and which is like why it's so like disappointing that I don't have it yet. And it's not that disappointing because, again, like, why is it impossible? I need to know why it's impossible. To me, it seems entirely possible. And so, yeah, like it would be incredibly fun. And I think I can de-risk it. I think I can de-risk it by like 80%. Seriously, I could just take like 80% of the risk and neutralize it. Doesn't mean it's risk-free. Doesn't mean you can't have a total loss of funds, but it does mean you can have a lot more fun. And that is a good purpose to work for. And so, yeah, I'm going to keep on cranking on my code and see if I can get it working for myself, and keep you guys updated. Okay, see ya.